Hello and welcome to my morning report on Tuesday the 21st of July with me, Rich Pro Market Analyst at Handtech Markets. The European session fairly stable, nothing too significant going on at the moment. The markets are pretty much settled down as Greece has repaid its debts, cleared its arrears with the IMF, and also repaid the ECB through that bridge financing, that 7 billion worth of bridge financing that it's got in place. It's now been able to pay its debts off, and it's sort of this. It's just beginning to just sort of settle down into more of a sort of a bit of a something that's going to be affecting the markets into the future, really, because I think the next real impact that the market's going to see from this Greek situation is the bailout negotiations and how they progress. So I think that until that happens, I don't think Greece is going to do too much more in terms of sentiment. I think markets will be focusing elsewhere. I think the gold price flash crash that we saw yesterday is probably the main real news at the moment. As other than that, you've got forex markets that are pretty much settled. You've got equity markets that are settled, and that is pretty much all that the only real big mover that we have at the moment. And if you look at the peripheral bond yields in the eurozone, they are still falling away slightly, which is obviously a sign of confidence that is returning. And you can also see that the dollar is holding on to this breakout that it saw last week, but no major moves that we've got. Look at the VIX, the volatility that we've got on. If this actually works, there you go. Look, this is the VIX chart. So sharply lower from where we saw just a week ago, really. The VIX volatility just suggests that traders in the States are no longer really sort of so hell-bent on finding short protection for their portfolios. So it seems as though that the markets are pretty much settled at the moment, and they're looking for direction once more. And it's pretty much what we're finding ourselves with, because there's no real data out today. You've got the UK public sector net borrowing at 930, but that doesn't tend to do too much. Maybe a little bit on sterling, but again, it doesn't really do a great deal. And other than that, there's not too much going on. One of the forex majors that we have seen movement in the last couple of days is my chart of the day today, which is the Kiwi dollar. Now, what we have seen is one of the best downtrend channels examples that I could probably find, actually, is the Kiwi over the last 3 months. Consistently falling away, lower highs, lower lows, momentum indicators all negatively configured, but you do tend to get these little bounces, and what we've seen is it wasn't. I mean, I sort of said in the morning, in my morning report, that it was this reversal pattern that it's had in the last 3 days is formed a little morning doji star. It's not perfect because yesterday's close was slightly. Well, it should have. If it put it this way, if the close had been up at the high of the day, then yes, that would have been a really good example of one. But it just slightly drifted into the close, but still I think that is a valid pattern, and it certainly is showing through again today where this reversal is seen. But you can see in this downtrend channel, you wouldn't want to back against this downtrend channel continuing, and I think this rally that we're getting is going to give us another chance to sell. The momentum indicators across the board, yes, have turned around near term. You've seen a little uptick in that RSI, also on the stochastics as well, but you wouldn't really be sort of confident in buying this, because every time the RSI gets back towards the sort of the mid 40s, it falls away. It's currently sort of mid to high 30s, and also the stochastics as well have got this configuration where every time you get this bounce, you got one in May, you got one in June, and early July as well. So every time you get these sort of bounces within this trend channel, it gets sold into. So what we have got at the moment is this technical rally that's underway. You're now approaching, or you're now virtually at this initial resistance, which is the old support around that 66.20 key low that we saw back in early July. That is now being tested pretty much as we speak. But look also at the major so the turning point that consistently is being seen around this 21-day moving average as well, and that's interestingly, at around about 67.10 at the moment. And that pretty much flanks the top of the trend channel as well. That trend channel coming in around 67.40, I think today. Yeah, about that. So there is room for a rally, and it's interesting that this rally is coming in front of the RBNZ, which is on Wednesday. The RBNZ monetary policy at 10 o'clock Wednesday evening UK time. There's comments that out from the Kiwi Prime Minister yesterday suggested that perhaps the Kiwi dollar had gone a little bit too far to the downside, and maybe, well, I mean, will that affect the RBNZ in their monetary policy? Market is sort of teetering on the brink of forecasting little rate cuts, so depending on where you get your information from. So it'll be very interesting to see what happens yet tomorrow evening. But in front of that move, we are seeing this rally on the Kiwi dollar. This is that trend channel on the hourly chart. Just zooming in, and you can see that resistance up ahead. Around 66.20, that is the first line of resistance to be found. Then you've got above that 66.70 area, and then subsequently when you sort of move back towards the top of that trend channel. So a little technical rally we have underway, but how far it's going to go remains to be seen, because you've got this overhead resistance in place, and also you're finding the hourly RSI is already coming towards 70 again, so which tends to be its limit. So I wish you good luck in your trading on the Kiwi dollar today, and I will speak to you later.